All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 30th, 2023. It's hard to believe we're already through the month of January, except for tomorrow. Way to go, Chiefs. Super Bowl. All right, let's start with the swing trade portfolio. So we ended up getting a lot of sell offs today. We'll start with Cliff Natural Resources. Oops, let's get this plugged in. You'll notice that 100% of the swing symbols were down today. So we were long from Cliff from last week with a wrist box at the belly of the dragon. That thing has been rolling way up. We moved our stop to here on Friday. Today it gapped open to that yellow dot to here, and I was very tempted to exit, but decided to give it room until it hit the stop or didn't hit the stop. It zoomed right back up. It looked like it was getting ready to try to keep breaking out, but it rolled over, and as soon as it rolled over, with the rest of the market getting weak, we took the exit here and exited the swing after the PSAR flip, the formal PSAR flip, so we're out of Cliff. CVS was a Godzilla. It was at the end of its long, painful sell-off. There was the PSAR flip. We took the next day's gap up and go with an entry there and a stop vicinity, the belly of the dragon. That thing gave us 1 day of upward movement, a second day that a stop and go. Today it opened and then rolled off, and by this time in the afternoon, everything was selling. So just discretion being the better part of valor, we just took that one for about 1 hour and said, thank you, Godzilla, King of the Monsters. Check or hold. Devon Energy was a trade that we exited at the close Friday after that big sell-off, and it came down and hit that. We wanted to reduce exposure because of the weakness in energy that was creeping in, and it after we sold here, it closed there on Friday. It opened and then it opened here and then immediately started selling off, and when it moved a standard risk box from the open and everything else was getting smashed, we got short, and this thing is pushing to a 10-day low, and that one is already almost 3R in hand on the swing. So I'm going to put my stop in just above that little hump right there to protect it for tomorrow. And if it continues to fail, I'll be on it fast for a intraday position. So the energy play was pretty good. I really liked the reaction against that gasping upward move, and it couldn't hold and selling off and just taking a reasonable move, which was the size of that reasonable move. So there's a symmetry in the size of the moves, and it failed right where it failed before. So that one was actually easy to take, and then that put me in a zero state to be able to take this on continued weakness in energy. Now, Ethereum is an exchange-traded note, so you can't get short that. You could be short Ether, the actual coin, but this was one where we had been long, missed the chance to get out, and the next day missed a chance to get out, finally covered for a fractional win down here, and we were stalking this thing. Now, today, when everything started to collapse, this would have been the logical place to get short, or after this R10 wiggle, you could be short in here or short here with the collapsing dragon. So any one of those three were low-risk entries on the short side, trading Ethereum directly. We weren't able to do that. We can only go long ETHE, rules of the exchange-traded note. But this thing is right at a 10-day low and getting ready to collapse further. So if you're if you're a crypto trader, you might want to pay attention on that one. So this is Mexico. So Mexico on Friday, we exited a 2-position swing. Today it opened in here and then started to continue the sell-off. So we got short here with a standard risk box. You know, the exit was higher than the high of the day, so I still feel pretty good about that one. It didn't really sell off much, so I'm going to keep this exit right here for a couple days and give this a chance to find its legs to the downside. The first target I see is this one at around 57, which is your 2-to-1 compared to the actually almost a 3-to-1, sorry. And then if that fails, we should have a second position on here, and then I would expect it to come down to 55.75. So we're short Mexico. That one was it was not a great intraday trade. This is Brazil. So Brazil is also one that we got out of on Friday because of we had been long and then there was a big gap down and started to sell off. So we just cashed that one and then watched it suffer the rest of the day. Did not get short. Today it opened, started to roll over. When it violated below the belly of the RL10, that's a collapsing dragon. Standard risk box here, and down she goes. Okay. My targets would be down here at the 5-day low and the 10-day low. That's, target 1 and target 2. So I'll just play that all with one position. Real estate was one where we had caught the SSC, rode it out, got the second leg up. Friday it closed really, really well, and I was looking to add more if this would go, but it didn't. And about 2 hours in, it just started suffering, and I finally got the R10 penetrating the PSAR, so we just took that one. So we're out of IYR. I'm looking to see where this is going to turn around. I'm hoping to see it turn around higher than 89.25. Any reversal in the RL10 that happens north of 89.25, we will treat that as a COTA 2 opportunity, and then using the 10-day high as a target. So we're just continuing to stalk that one, and happy to have made bank on that one. McDonald's, I'm always on the wrong side of this one. So we stopped and reversed the short here. It gave us a little bump and then started failing, so we just got out of that for a scratch. Just going to leave that alone. This one is marijuana. So MSOS, we'd gotten a nice 2-position short, which we covered at the SSC, and then Friday took the SSC long. Today it started collapsing into the PSAR flip right after the open, so all other things being equal, I just took that one there. I'm stalking that one for a fail. I'd like to see it get below 630 to be short. But if this one holds and breaks out above 650, I think I would be ready, especially if we saw some strength in the market. I might be interested in the resumption of that one from 650. This was so horrible, and the market was down big today, but that's really not that much of a sell-off. It was enough to get out of that trade and make bank, but if it doesn't fail further, I will take that as evidence that this could go. So I'm going to be ready tactically at 650 on marijuana to the upside. Check or hold. This is clean energy. So this one gyrates, as you can see. We're ready to trade both sides of that. This was a long swing that terminated here. It led us to a stop and reverse, which we just got a no-lose plus dinner for 2. Should have been able to get that exit instead of this one. Nevertheless, We were a little slow getting into this one. Um, like I could have stopped and reversed here, but I let my beliefs get in the way. So we missed that move, missed the gap up. So we finally took this one with a wide stop, and then we're late getting out for a micro loss. Took uh, the Kata 2 long, suffered through all this, exited here today on the PSAR flip, and then on a continuation, when that turned from summer to fall, got short here with the standard box. So now, bottom line, we're short one on clean energy with about 1R in hand. We're about 1R in hand. I would be interested on a second position if it breaks through 43.50, which is that support level for the collapsing dragon. And if that breaks, I'd be looking for it to get down here around 42 even, which is the previous RL10. So we're short clean energy, all other things being equal. Next up, treasuries. So we've got a one position long on this one from the solid support level. It hasn't really done much. I thought that since today was a down day in the S&P, that we'd see, rather than a sell-off, I thought we'd see some of this. We didn't get that. It's still holding above my stop level, which I just have down here around 105 and a quarter. With 1, 2, 3, 4, 5 days in, and it hasn't moved. I'm ready to move my stop up into here. I just think that with today's weakness, there's a good chance to see that go, and so moving the stop up to here won't hurt me, but it'll keep me from losing money on a 5-day hedge kind of a trade. Tesla, this was one where we got the you will recall we were long from here in the Z3 breakout, took this exit, thought about re-entering, didn't want to chase the trade, so we missed the gap up, and then when it broke out again, did not fail. We bought it intraday here, and this gave us like 1.5 days of nice move, and then today it opened and then started selling off right away. So we took the PSAR exit at 173.8. So we did get that little piece. So not bad. Finally, U.S. Steel. We had a Kata 2 plus a emerging dragon breakout with a wide stop down here to the double bottom in the RL10. We had a few moments of joy, and then this thing, we didn't get out here. We wanted to give it one more day, and then today just started selling off hard. And when fall turned to winter, I just got out and made, a third of an R on that little piece compared to my risk. So mostly out of the swings except for a couple of those shorts that you saw, and then treasuries on the long side. So raised cash on this last burst, and now we're stalking in both directions. Check or hold? Okay. Shifting to the sniper trade of the day. So this one is Alcoa. So the metals have been on our short list. Alcoa especially. So here's where it closed on Friday. It had no gap today, and then it sold off instantly in that first bar, 1 MMRB, and then this is still in the same opening 2 minutes. It went to, when it sold off 2, I went ahead and took the entry here, and using one of those boxes as the risk box. Okay, so I let it fall too, and we're still in that opening 3-minute bar, and it's dropping like a rock. So don't try to catch a falling anvil, jump on top of it. So we're short Alcoa from there with one standard risk. Check or hold? Right, we're still in the first box. That thing drops almost another 2 boxes. So 1, 2. It moved 4 MMRB on the first in the first 3 minutes. So all I try to do there is get my stop from here, get my risk out, lock in my little gains. I'm thinking hard on a second entry, but I felt like most of the move was over. I was worried about that one. I didn't want to chase too quick, so I wanted to respect the volatility, so I just kept it with one position. And this one gave us this kind of a move. It gave me some consolidation in here, and then started to recover. So I took the exit at the edge of the dragon. All right, so what I'm doing on that, so you can see that. Is that after this consolidation, it rolls down and then starts rolling back up. And here's the edge of the dragon. And so as that thing hits the edge of the dragon, I just take the exit and call it a day. Then it immediately starts to fail again. So I re-enter short with that same standard risk box, check or hold. So we're just basically stop and go. That one immediately reverses against me, and there's like a double bottom here in the R10, and then you get that R10 wiggle. So when this thing does not follow through and I get a chance to get out at scratch, I just get out at scratch. Check or hold. Now we get the SSC. And so there's the PSAR flip. There's the R10 has gone from winter to fall, or to fall. I'm sorry, to spring. And now this is supposed to go right away. But it's not really, and you can already see the R10 starting to fail. So I don't really have a lot of confidence in this one. And properly so. That is legit to take the short right there. But this has been so volatile. I was not in the zero state. And I try the Kata 2 again. This is legitimate. If you're in the zero state, that's a legitimate short. If you are, then this would be a reasonable stop and reverse exit. Because if this is going to fail, it's supposed to fail through the belly of the dragon, through the PSAR, and then through the belly of the RL10. But it didn't do any of those. It just went sideways and then crossed the dragon. So if you get short here, that's a reason to get out there. You gave it 8 bars, and it did not fail. So, in the absence of failure, that's information. I just take the SSC there. Actually, that's a Kata 2. That works for a while, and then nothing. And it gives me a 1, 2, edge of the dragon. Now, again, the edge of the dragon is right here. Let me draw that in black. And I had about half an R on that one against my risk, and it's already falling and rolling over. So I'll take a half an R there and just be happy. I take the short at the PSAR violation. there's my wrist box. I'm looking to see it get below here and below the R10. On this one, this is the price level that I would look to add a second position on as a CD, because that's a new low. And this one here is not enough distance from the open to justify a second position. I mean, if you were going to do that, you should just put two positions on right away and don't monkey around. So I'm not ready to do that. So this is just not enough to put a second position. So I would notice that, but it's not till I get to here before I'd put a second position on. Suffering, starting to work. And then it kind of grinds into the PSAR flip. And with all that time in the trade, all it really did was give 1R, and it never really gave me the failure that I was hoping to see. So we just take that one. And then as soon as I get out, it immediately reverses to the downside. So I re-enter and get a fraction. And now it's after 2, so I just leave it alone. So this gave us about 3 to 4R for the day in Alcoa. And it really was the opening range that was the big payoff. So that was the sniper trade of the day. Let's see here. All right, so the only chart we had posted today was from Nolan. Get him loaded up here. Notice the increased calmitude now that he's adopting the Kata 2 approach. He is specifically trading one pattern on one symbol. He is simply noticing the others and marking them up, but not inclined to chase. And today he's going to bring home 2.5. This is in Tesla on 3 minutes. Here's the OR3. He gets short like he's supposed to. It sells off, comes up before going down again. So he just takes his 1.1. Thank you very much. He noticed the SS. That's not technically an SSC because you don't have the RLXD yet. You don't get that until you're over here. So not quite an SSC. When this does roll over, he takes a Kata 2 to the downside. It reverses immediately. I think he's slow to get out of that, but it's still minus 1R, and that's okay. Now, on this, you could also take that same Kata 2 again, the same one you did here, only now you got the confirmation of the dragon rolling over. So you could technically get short there, but he waits for the PSAR flip, so he's short with a standard risk box, gets paid. I love that, cashing it at the 1 bar high, and then immediately cashing it at the 1 bar low. When it gets out of this doji and never even penetrates the dragon, he gets short again and gets the primary. Now he doesn't even wait for the 1 bar high. He just says, you know what, that's enough. Let me get paid 1.5 and 1.8. That's 3.3 just on those two Kata 2s with careful play. This is not an SSC yet. It's not until you get this and the PSAR flip that you get the SSC, and that was tradable. This is a reasonable short. It hasn't violated that yet with the R10. The R10's still in the dragon, but I don't mind that because it had 10 bars to go, but it didn't. So this is the primary move of the day. So I like that one, and I like getting out of it. I think on this one, when it failed and then didn't really make a new low, take it right at the edge of the dragon, and you'll cut that risk in half, or that loss in half. So nice work from Nolan. Much improved performance. much more professional feel to that. Good work. To the daily report. Before I get into the daily report, just let me put a plug in for the next cycle of Creativity 202. And there's two ways you can take that. If you are a subscriber within the sound of my voice and you want to take the home study course only, you have lifetime access to the files and the recordings of our coaching sessions. That's 100 hours of coaching with a group of professional traders. And if you're a subscriber, you can have that for 500. You don't get the the live attendance and live coaching. You get 1,000 off that one if you want to take that, but we normally sell that for $3. I'll give it to subscribers for $2, and that's where you can attend the live sessions. And even if you don't attend the live sessions, you can hear the new recordings of the new coaching sessions. So home study course for 500, live attendance for 2,000, plus full access for a lifetime to all of the coaching. There may be a lifetime's worth of material. Just in the first session we did with that 100 hours, there was some amazing work being done. So just want to respect and reward the subscribers within the sound of my voice. So just contact me and I'll get you the link. All right, to the daily report. To the reports. We have dropped back down into sideways. Quiet. It's still a positive, but it got just a little bit weaker because now we're within 2% of the 200-day moving average, and that puts us into sideways. Risk on is for the risk C. It's still at a normal level above the zero line, and that's still favorable to the upside. But it got a little weaker today, if we're being honest. Let's see. 10-day min pains, Diamonds, JP Morgan, Caterpillar, McDonald's, Cisco, Alcoa, Walmart, Intel, still suffering max pain conditions. So I'm should have had Intel today. Although I have to say Intel was not as bad as some others were. Like Johnson & Johnson got smoked for minus 3.5%. Intel was only down 0.6, whereas Chevron and Alcoa both got murdered. Tesla got murdered, so Intel not quite as bad as the others. I'm noticing a lot of auto framers. 1551W here in Intel, believe it or not, that actually had a white candle for the day, meaning it opened up with a gap down and then closed higher than the open. So that's actually a positive sign for Intel that it may have, on the basis of one day, put the bottom in. Weakness in Johnson & Johnson on the 10-day, 1 month, and 3 months. That's how you read that. Each of those columns is the look-back period. Weakness in Chevron and weakness in Pfizer, which is 4.7 to 1. So some opportunity trades there for the weak ones. In the ETFs, saw some new weakness here in oil and in healthcare. Some 551Ws, meaning that they are a 551W for you swing trader noobs, is that compared to 5 weeks ago, today's close was higher than it closed 5 weeks ago. So it's positive for the last 5 weeks. The second 5 means that if we go back 5 days to the close, today's close was lower than where it was 5 days ago. So there is so even though today was higher than 5 weeks ago, there is sort of a pullback, which creates the tradable recovery. And the 1 means that it was a white candle, meaning that it opened at one level and then closed higher, so you have a white candle independent of the wick. So that it opens here and it closed higher, and that the W means that the Williams percent R is below minus 50, meaning that there is a tradable move just back to the 10-day high. Okay. So there were a couple 551Ws, emerging markets, which has had real strength. Gold and Europe, energy, and oil exploration. So I would be partial to oil exploration because it's so volatile and so liquid. I also like the European 350 and the emerging markets because the globals have been so strong. This one little pullback simply creates an opportunity for recovery once we see it moving. You know, the other side of that is I'm just concerned about the geopolitics of Europe, which is continuing to march towards increased hostilities. Russia's calling up another 200,000 troops. NATO is trying to pressure South Korea, not a NATO member, but an arms manufacturer, to send lethal aid to the Ukraine. So that thing is coming to a head. It is not good. In the auto framer, we got plenty of things to choose from. Walmart, for example, is 13 to 1. I guess we got to go look at Walmart. So I'm going to go from the swing portfolio back over to, I think that one is in my boot camp list. Nope. So we're going to go to the S&P 500 and call that one up. Oh, I see what that was. Yeah, now that one, the anomaly on this one is that there was the, last week there was a giant spike at the opening, which gave a false print up here. So it's given a false view of the 10-day high. So don't get caught up by that one. This is one of those cases where you don't robo-trade. You always go to independently verify. So that's not a healthy chart, but it's not the worst we've ever seen. This actually is not too bad in Walmart, if I'm being honest. There's kind of a kata 2 starting to happen. There's a kata 2 from here to here and a kata 2 from here to there. And it actually had a nice close today. From the open here, and had a nice close in the last half hour. I actually think I like that one. If we saw some strength tomorrow, let's keep an eye on Walmart as an opportunity. So you can observe a lot by watching. This is why I don't ordinarily just look at a lot of charts. I have to have a reason to look at charts, otherwise I'll find some reason to trade it. All right, let's go right to the snipers. CNC is still wildly oversold and quietly optimistic, with a very quiet 5-day and 1-day volatility ratings. The Z-scores are less than 0. And then no Godzillas in the tactical symbol set. Part of that is the chevron move actually worked. Let's see. Quick look at the sniper stats in the 1-day movers. These really stand out for me. Johnson & Johnson with a 4 sigma move. Johnson & Johnson with a double volatility. Tesla also. So that's where the real live movers are happening when you see that. Yep. Tesla, Johnson & Johnson are certainly in play. Could we go look at Johnson & Johnson? Someone asked. Why, sure. Let's clean all that out. Yeah, so now we're looking at the 30-minute play on this one, and you can see that it just dropped like a stone. It blew right through the support. This was setting up to be a head and shoulders and nice recovery. Psych, smashed. If we go back and look at it on the daily, you can see that this is getting very close to Godzilla territory. And the reason is, here's our 150-day low. Today was a 30-day low and a 10-day low. And look at the size of the 5-day volatility. It is very volatile, and the 1-day is very volatile. I'm just going to declare that one as a Godzilla. And yeah, I mean, today, if you'd had it on your short list, it was a collapsing dragon from about here when it violates below there, and you get all of that move. But I'm really just kind of interested in bracketing this with maybe $1 of risk and play the breakout long or the breakdown short. That's how I like that one. Let's look at it on the, if we looked on the 10-minute chart, you can see what, even on the 10-minute chart, you can see how tradable that move was. That if you're alert to the opportunities, anywhere from here short, that's a 20-minute time frame in which you could get short and still get advantage of half the move. And then even the rollover here, being short inside here. So yeah, I like this one. If we put the risk box here at 162 and had $1 of risk, you'd end up getting long tomorrow, like about there, and short tomorrow here. I'd actually get short as soon as it violated the belly of the RL10. So let's come back and look at Johnson & Johnson tomorrow. That's free chicken for you right there. The benefit of listening in. All right, standard stats. Leave it to you to study. Look at this Johnson & Johnson. Like if you didn't already know, and Ethereum, we already saw how that got smashed. Emerging markets, a big break. Excuse me. Oil and healthcare significantly breaking down on the 10-day, with healthcare breaking down on the 30-day as well. That's real weakness for you right there. And you can see that reflected in Johnson & Johnson, Pfizer. Yeah, not good. When even your key leaders like Mexico, that's strength, got assassinated. We got to remember, this is a sideways, quiet market. We haven't even seen volatility yet. So be mindful. It's like you're saying, it's quiet. Yeah, too quiet. All right, I think that's everything we wanted to cover, with the final exception of where is the real tradables, the large range percentages, and the reliable volatility, consistent volatility. That's Tesla, Clean Energy, Alcoa. That's what you see me trading. Even Microsoft is in there. Look at those strong frog qualities right there. So Apple, oil, and Home Depot need some love. And real estate, 3.4. All right, that's everything we got. We'll get this published and posted and ready to get them tomorrow. Thanks for your kind attention. Again, if you're interested in the creativity course, it's going to start up on the 12th of February is when the first lesson gets debriefed. I'm going to give a Q&A session on Saturday, this coming Saturday, and next Saturday. That's the 4th and the 11th. And then we'll start lesson 1 on the 12th. There are plenty of samples on the reports page and the podcast archives page if you want to see what it is that we do. All right, guys, that's everything I got for you. Take good care.